Friday, August 19th, 2016. Monaco 64 here, home of alternative economics and contrarian views. I like to talk about negative interest rates. Many of you know that about $13 trillion worth of government bonds now have a negative yield, but also central banks like the ECB, the Swiss National Bank, the Bank of Japan, they've set actually negative deposit rates for the commercial banks that are part of their system. And just today, RBS, which is about 70% owned by the UK government, announced that they're going to start charging large UK companies to hold cash, specifically in the investment banking arm, where clients trade futures or other derivatives, and they need to keep a cash balance as collateral. So they're going to start charging negative 0.1%. So you might say, oh, that's not going to affect the average person out in the street. But the thing is, these banks, they start out with a big corporate clients, and then they start moving down towards, the medium-sized businesses. And eventually it will get to the point where small depositors will be charged to keep money in the bank. And why is that happening? Why, one might ask, why such a crazy policy from the central banks? And in my opinion, the reason this is happening is because after 2008, the governments of the Western worlds, the U.S. government, the UK government, the ECB, the European governments through the ECB, they've had to bail out the system and take on a massive amount of debt, public debt, to back the money that's been pumped into the central banks, because that's how they do it. And the problem with that right now is that all the European economies and American economies have not picked up at all. We all know how phony all these statistics are, the 4.9% unemployment in the US and the UK. That doesn't mean a thing, wages are going down, tax receipts are not going up. So if the central banks allowed interest rates to normalize to a normal rate, which should be more like 4 or 5%, all these big Western governments would, go bankrupt, or they'd have to just print the money, really print money a lot more than they've been doing now, and it would just be a mess. So they're sucking the blood out of the productive economy with these very low rates, now negative interest rates, to keep the governments from collapsing under their, the huge weight of debt that the governments have. And the reason why the banks, and even, the banks usually benefit from governments borrowing because they lend to the governments, but now it's getting even too much for the banks, so they're having to punish their customers. And it's starting now with the big customers. I think last week a German bank, a small German bank, announced they're going to start charging negative interest rates as well. And so what's this all mean? I think it means, that's another fundamental reason why one needs to hold physical gold. Because like many people, have said in the last few months or in the last year, in the world of negative interest rates, gold is a high yield asset, even though it doesn't pay interest. 0 is better than negative 0.5. So fundamentally, it's, gold is the place to be. And you can see by the actions of the smart money, that's the case. Lately, gold has been frustrating. Like today, it's down about $10. Silver's down, but I think one needs to be patient, and because the fundamentals are right, and you just got to be patient and sit tight and hold on to the gold. Because it will also protect you. And I'm sure a lot of insurance companies and bigger companies, when these negative interest rates start reaching their bottom line in terms of, bank deposits, wherever they may be, they're going to start thinking of ways to circumvent that. And, holding, a 400-ounce bar of gold is much more efficient than holding a huge, 400-ounce gold bar. That's about, let's say, $500,000. It's much easier to hold, the 400-ounce bars than $500,000 in banknotes. So even, Lord Rothschild came out, his latest statement for his RIT Capital Investment Trust Fund came out and said that because of unprecedented monetary policy and negative interest rates, they've increased their gold holdings to 8% of their funds, and that was as of at the end of June this year. So they might have even increased it more up, till now, till the middle of August. So there you have it. FT reporting today then that RBS is going to start charging large UK companies to hold cash. It's pretty soon it's going to go down to small customers who hold a few £1,000s in the bank. And so that's the situation. And what else? No, that's it. So that's another reason then, the negative interest rates, they're starting to sift through to bank deposits. It's come all the way, from the government bond market, and now it's going to go into the deposits. So if you enjoyed this video, please like, share, and subscribe. And if you'd like to donate to my channel, there are a few links below for PayPal, Patreon, and Bitcoin. Thanks for watching. Bye.